Let's start with the crude prices, which are holding steady around $108 per barrel. The energy space got a boost from upbeat Chinese manufacturing numbers, which show accelerated movement in the month of March. The HSBC Flash Manufacturing PMI registered 51.7 for March against 50.4 in the month of Feb. An increase in the manufacturing activity means that the demand from the world's top oil consumer could see further upward movement. But there are lingering worries over the Cyprus bailout situation and the Eurozone concerns, and all of that is showing onto the prices on your screens there, nearly 0.5% of a decline coming in. Meanwhile, the gold prices have lost its momentum as Cyprus bailout fears have eased at least for today, but the yellow metal gained on support from Fed's announcement to continue its easy money policy. On your screens, we've seen nearly $3 of a run-up, so 1,600 moreover is holding in case of the gold prices. Let's keep the focus with the non-agro space and take it to our experts then. Joining us is Deepen Shah. He is business head of broking, Staben.com. Also joining us is Vijay Bhamwani, author, CEO, BSPLindia.com. Deepen, hi, let's start with you first. And what's your sense coming in for the precious metal prices? Some bit of a gain that has continued today as well. But then again, we haven't broken that 16.15 mark on the higher side.
Absolutely, as we've seen that 16.15 is not broken on the higher side, but simultaneously we are also seeing that 15.75 is now acting as a very strong support for the gold prices. And for the last two trading sessions, we have not seen 15.75 also broken on the lower side. Thus, as long as 15.75 is not broken, we could expect some positive bias in gold prices, and we could also see 16.15 again reaching on the international prices.
Vijay, how would you look at the precious metal space now? No major supports or resistance levels broken here. How would you want to trade it?
Manisha, I'm still off the precious metals pack in the leverage space. I think I talked about gold having a resistance at 29,850 odd levels. That view remains in place. Nothing has changed that view. Maybe I would give it a leeway of 50 rupees up to 29,900. But I, over the last three trading sessions, have talked about a very persistent deleveraging in the financial market space. I can still see on my screen that deleveraging bias still persisting. So I don't think anything is running away anywhere, especially in the hard asset space, whether it's industrial metals, whether it's precious metals or energy. The pockets of activity might just be polarized around the farm commodities, and even there I don't see any kind of exuberant buying. So my guess is it's going to be a very range-bound market, with prices being thrashed about in a percent and a half band in either direction.
Deepen, what's your sense coming in for the crude prices now? Because we've seen declines come back into the market again. It hasn't really been able to sustain on the higher side.
Absolutely, and fundamentally also there are not so many supportive news that are emerging, and we've in fact seen some negatives that were emerging. It is only today that we've got some side of positive news emerging from China. Thus 94 on the higher side is not been able to cross since a very long time, and 5100 on Indian markets is also not being crossed for a very long time. Thus experienced traders and aggressive traders could in fact short crude at this level, and we could expect 5,000 levels to be seen in the near term.
Vijay, what's your sense coming in for the natural gas prices now? Further sells on that one?
Yes, Manisha, I talked about 218 and 212 as the tight band. None of these parameters has been tested in either direction, which tells me that the range remains intact. Currently, the March month futures are at 215.5. So if I do see a percent bump up from here, I don't really mind taking a pot shot on the short side. In case I do short at 217.5, 218, my target for booking profit would be close to 212 or 13. On the flip side, if 218 does not come, but I get 212 first, I don't really mind getting my toes wet by buying a very small lot at 211 or 212 with a view to exit at 3 to 4 rupees of a bounce up.
All right, so a sell on a buy call coming in for the energy space there. But Deepen, how would you look at the base metal prices, especially zinc, because the Chinese data today has been on the better side. The Fed stimulus is expected to continue. Do you think these couple of factors would support?
Precisely. If we've seen all the base metal packs, we've seen huge profit booking in the beginning of the week, and now we are seeing that some kind of bargain buying has been happening in terms of prices. And zinc is relatively showing a high relative strength as compared to all the other commodities. Thus, any dips in prices at around 103, 103.50 should be used for buying. But again, the quantity should be limited, as we are kind of just playing for a bounce back rather than a proper change in trend.
Well, absolutely. Vijay, how would you look at copper? 2% up on Shanghai today. We saw 1% of gains coming in for the Asian and the European markets on LME as well. Do you think there's further support?
Manisha, support, yes. Impressive, compulsive buying, interested buying? No, I don't think so. I think it's more of a technical bounce back coming in because the short sellers are locking in their profits and taking money home. I mentioned deleveraging, and that in that deleverage kind of a scenario, I don't think fresh money is coming in. For prices to move up, there are two counter forces which the bulls have to overcome. One is the force of gravity, and the other is selling by the bears. I don't think the bulls have that kind of firepower in them to take prices up rapidly against the overhead supply factor, which is so dominant and omnipresent. I doubt if copper will be able to breach the 422 to 424 band in the coming 1 or 2 trading sessions, barring any further positive data points emerge from some very large economies.